most valuable tech company?
This company is now worth more than most other countries' GDP in the world. It has, in fact, surpassed Australia, South Korea, even Russia.
Nvidia is without question or shadow of a doubt the most bizarre stock on the market today. Across the last 5 years, the stock has risen over 1,900%, taking their market cap from $165 billion in February 2020 to around $3.4 trillion today.
It must be Nvidia.
We're going to roll the animation as Nvidia, a $4 trillion market cap, which no company's ever done, Jim.
Nvidia, the tech titan, the undisputed king of AI chips. For years, their stock has been a rocket ship, propelling portfolios and the entire market skyward. But what if I told you this rocket ship has a ticking time bomb? And what if that bomb isn't just about Nvidia, but about the entire stock market itself? Today, we're diving deep into why a potential crash in Nvidia's stock wouldn't just be a bad day for shareholders. It could be a catastrophic event for the broader market. And more importantly, why it's a possibility we have to consider. Let's start with the obvious. Nvidia is everywhere. Their GPUs, graphics processing units, are the engines that power the artificial intelligence revolution. From training massive language models like ChatGPT to powering the graphics in your favorite video games, and even driving advancements in scientific research and self-driving cars, Nvidia's technology is foundational. And their financial performance, simply astounding. Their revenue has exploded. Their profit margins are the envy of the tech world, and their stock price has mirrored this success, becoming one of the most valuable companies on the planet. But here's where it gets interesting. Nvidia's meteoric rise has had a ripple effect. The company has become a massive weight in major stock indices like the S&P 500. When Nvidia goes up, it pulls those indices with it. And when it goes down, well, you get the picture. Think of it like this: a few giant pillars holding up a massive building. If one of those pillars starts to crumble, the entire structure is at risk. Nvidia has become one of those essential pillars for the current market rally. Reasons for a potential Nvidia crash. So, why could Nvidia crash? It's not a single factor, but a confluence of potential risks. 1. Escalating competition. While Nvidia dominates, the AI chip market is fiercely competitive. Companies like AMD are making serious strides, and new players are emerging. If competitors can offer comparable or better performance for less, Nvidia's pricing power could be challenged. 2. Demand saturation and shifting needs. The initial AI boom has been about building out infrastructure. But what happens when the major cloud providers have enough? Or if the next wave of AI innovation requires different types of chips that Nvidia isn't best positioned for? Demand could plateau or even decline. 3. Geopolitical risks and sanctions. The current geopolitical climate is volatile. Restrictions on exporting advanced chips to certain regions, coupled with governments wanting to build domestic chip manufacturing capabilities, could significantly impact Nvidia's global reach and revenue. 4. The AI bubble concern. Let's be honest, there's a lot of hype around AI. If the promised returns on AI investments don't materialize as quickly as expected, or if we see a widespread pullback in tech spending, Nvidia, as the primary enabler, would be heavily exposed. 5. Valuation concerns. Nvidia's stock price has grown exponentially. While justified by past performance, some analysts believe its current valuation is simply too high, making it vulnerable to even small disappointments. At almost a $4.5 trillion valuation, its weight makes up over 8% of the S&P 500. With a concentration that large, any slight upset in a quarterly report could send shockwaves through the market. The domino effect on the market. Now, let's connect the dots. If Nvidia experiences a significant downturn, here's what could happen. As we mentioned, Nvidia is a huge part of major indices. Its decline would drag down the entire index, forcing index funds and ETFs to sell Nvidia and potentially other stocks to rebalance. A major crash in a stock as prominent as Nvidia would likely spook investors across the board. It would trigger a risk-off sentiment, leading to a sell-off not just in tech, but in other sectors as well, as investors seek safer havens. Nvidia's success has fueled investment in the entire tech ecosystem. A crash could lead to a re-evaluation of other tech companies, especially those reliant on AI infrastructure, causing broader declines in the sector. If Nvidia's stock price impacts investor portfolios significantly, it could lead to reduced consumer spending and business investment, slowing down the broader economy. Segment 5. What investors should do and not do. This isn't about predicting a crash, it's about understanding the risk. Ignoring the potential impact of a company as influential as Nvidia would be, well, foolish. So, what does this mean for you, the investor? Diversification is key. Don't put all your eggs in one metaphorical AI chip basket. Ensure your portfolio is well diversified across different sectors, asset classes, and geographies. Understand your holdings. Know what you own. If you're heavily invested in tech, especially companies dependent on AI, understand the underlying risks. Focus on fundamentals. While sentiment can drive short-term movements, long-term investment success is built on solid company fundamentals. Look beyond the hype. Don't panic. If a downturn occurs, remember that market corrections can be healthy. Panicked selling often locks in losses. Have a strategy and stick to it. Consider hedging for advanced investors. For those with larger portfolios, exploring hedging strategies could be an option, but this is complex and requires professional advice. Conclusion. Nvidia is a remarkable company, and its technology is undoubtedly shaping our future. But in the interconnected world of finance, as we've seen time and time again, the fall of a giant can send shockwaves through the entire system. The Nvidia effect is real, and being aware of its potential impact isn't fear-mongering, it's smart investing. What are your thoughts on Nvidia and its role in the market? Let us know in the comments below.